Hi everyone, this is Mike Kramer of Mott Capital. Today is Wednesday, January 24th. It's around 5:45 New York time. So tomorrow we'll have the big ECB rate decision and press conference to follow. Expectations are for nothing to happen at this meeting with just a 2% chance for a rate cut tomorrow. Obviously, what we'll be listening for and be trying to get a sense of is whether or not the market has priced correctly in the 6 rate cuts for 2024. It seems to be that there's something magical about the number 6, I guess, because that's the same number that's being priced in for the Fed as well. So, clearly early indications from what at least I've heard and observed, it seems a little aggressive to me on both fronts, and it seems a little bit aggressive for the ECB at this point as well. So we'll obviously be looking for any sort of color we can get there. So if we just start off with the euro, it was an interesting day for euro trading because today you had this, I guess today you had some euro strength initially in the morning. If you remember in our last update, we were talking about this downtrend, and the euro actually broke above this downtrend at one point today and then gave most of it back to finish back below the downtrend. You can see, here how we rallied sharply overnight and into the U.S. morning. And then we got this stronger than expected U.S. PMI report, which resulted in the dollar beginning to strengthen more versus the euro. And then at 1 o'clock, we had a weak U.S. Treasury auction here, and that resulted in the dollar strengthening further as rates moved up, and that sent the euro lower. So it's not really very conclusive at this point whether the euro has really broken the downtrend or not. Certainly when you look at it from this standpoint, we have consolidated sideways through it. That's usually not necessarily a bullish thing. That's just sort of a time ran out thing. And more importantly is that, again, now this is 3 days in a row where we've gotten up to the 10-day and 2 days in a row where we've surpassed the 10-day exponential moving average. And in both cases, we moved back below it by day's end. And so tomorrow, you're going to have another attempt to take out that 10-day exponential moving average. And anything that sort of gives investors a hint that the ECB is, any hint that the ECB may give in terms of which way it's leaning when it comes to the path for rate cuts, the timing of rate cuts, maybe even some of the conditions around rate cuts, will give the market more clarity in terms of what really happens next. And clearly, what happens with the euro is largely going to be dependent on actually 2 factors tomorrow. The first factor being ECB rate decision. The second factor being U.S. economic data with the GDP expected to come out. So clearly, hotter than expected GDP is probably going to work to strengthen the dollar, and that may very well outpace whatever sort of announcement and news we get out of the ECB. Right now, it looks like U.S. data continues to come in strong, and that would sort of put us in this camp where the U.S. isn't going to probably go into a recession, likely raising rates here in the U.S., likely meaning that the dollar can strengthen. And so unless the ECB comes out with some really hawkish rhetoric tomorrow, I still think that the path of least resistance, as long as we remain below this 10-day exponential moving average, is going to be lower for the euro, with support at this 108 area. And if we were to break support, an eventual decline to around 107, again, momentum still seems fairly bearish. And until we get above this 10-day exponential moving average and actually are able to hold it, it's really hard to get too bullish on the euro. I mean, clearly after the 10-day, again, your resistance is somewhere around 109.5. We really need further evidence to really support any sort of true bullishness in the form of the euro rising, especially if the dollar gets a boost tomorrow from stronger than expected GDP report, which, by the way, is expected to show that GDP rose by 2%. Down from 4.9%, personal consumption looking at 2.5 versus 3.1. The price index, which is an important number, 2.2 versus 3.3. Core PCE index quarter over quarter. This isn't the same measurement that's used for the PCE that comes on Friday, which is month over month. So just keep that in mind. It's a different calculation in terms of how they do it. So it's expected to be flat at 2% versus the last quarter's reading. Also, what always is a very big number these days is initial jobless claims. They've certainly fallen a lot in recent weeks, and we're going to want to see if there's any sort of uptick in continuing claims or initial jobless claims. Layoff announcements have seemed to pick up a little bit at the start of this year and at the end of 2023, so it will be interesting to see if these numbers move at all. And then, of course, we're going to get new home sales at 10 a.m. So a lot of data coming tomorrow, and this is obviously going to have a big impact on the euro and the dollar, and anything that's going to impact the dollar is obviously potentially going to impact the British pound. And the British pound continues to just consolidate sideways, whether you want to call this a triangle or something else. Really, we just continue to flirt with this 10-day exponential moving average. And until we get some sort of concisive break either above this trend line at 127.50 or below this trend line at 126.80, it's tough to be, again, too bearish or too bullish on the pound. Again, overall, the momentum seems to be showing weakening. If we look at it really from a longer perspective, you can see that this top and this high certainly has more connections than this and this. I mean, you can almost kind of make a case that maybe says, this shouldn't be that far and this should be closer to this. And that's certainly a valid argument, right? Which would mean that, again, there still seems to be there seems as if there's more resistance to the upside at this point than there is. So I think until you break one of these trend lines, it's just best to kind of continue to watch to see how this maneuvers around the 10-day exponential moving average. The last time we touched on the DAX, we had noted that the DAX was trending lower, and I had noted that there was the potential for a bull flag to have been forming in the DAX. And at this point, it looks almost as if the DAX has now successfully broken above the 10-day exponential moving average for 3 days. It looks as if the DAX maybe broke on the upside of this bull flag. And really, all you need at this point to become more constructive on the DAX is just for it to continue to move higher. As long as the DAX continues to move higher, then I think the DAX could probably run a fairly long distance because, again, if you just look at it from a bull flag perspective, if this is the measurement, you're talking about a DAX that could have quite the run up here to 17,480. Again, but you need confirmation of that by actually continuing to move higher. Now, obviously, depending on what the ECB says, how the market readjusts to rate hikes and etc., that's going to be the challenging part, because even though the DAX appears to have cleared a bull flag, it really hasn't cleared all the resistance levels that are required yet to really think that maybe this is broken out, because it's possible that this wasn't a bull flag, right? And that was just one representation of the information we saw in front of us, but it doesn't mean that it's the only one. And you can certainly see at this point, you got 2 touches up at this level with failure. So the 16,980 to 17,000 range, very critical to the DAX. If you break above the 16,980 and 17,000 area, there's probably a lot of room to the upside. But until you pass that level, you have to consider that the risk to the downside is still present. And then finally, we'll touch base here with the NASDAQ 100. Today was an interesting day. As I already noted, the dollar kind of strengthened midday when there was a weak treasury auction, and you can see the same thing basically happened in the equity market at 1 o'clock. That was when we got the results of the auction. That was when we saw a big reversal in markets overall here in the U.S. Specifically, you saw the NASDAQ give back almost half of the day's gains in the final half of the day, and that creates not exactly the nicest looking candle here, closing towards the lower end and with the shaded green. Again, when we look at where the NASDAQ is, it's got 3 out of the last 4 days where it closed above the upper Bollinger Band. Today, it was trading above the upper Bollinger Band completely until the end of the day brought it back in. And we have an RSI that's now up at 75. Again, these are conditions that are overbought conditions. It tells you that the market is overextended, at least on a very minimal basis. And when we look at this and think about it, it would again suggest something similar to what we saw in this period of time, which was just sideways consolidation and an eventual pullback. It doesn't tell us when it's going to happen, but if we see here, we had 1, 2, 3, 4, 5, 6 days where we traded on the outside of the upper Bollinger Band. I mean, if you want, you could say this one counts as a day 4. So, I mean, it's possible that you get another 1 or 2 days to move higher. It's also very possible that we've kind of reached the limit here, and we're going to see some sort of pullback to the 10-day exponential moving average or the 20-day moving average, and at least kind of test it. Because again, here you can see you had 1, 2, 3, 4, 4 days where we were trading above it. The 5th day we tried it to trade above it. We had a big reversal candle, and that ended up marking the peak in the rally. And so this isn't a red candle, but it's a green shaded candle. Is it a similar sort of setup to what this was here? You know, we're still going to wait to find out. But you can see every time you get to the upper end of the Bollinger Band, you tend to get some sort of reversal or some sort of sideways consolidation. And you got the same thing here in June. You got the same thing here on July 18th and 19th, which actually turned out to be the high. And then we had that big drawdown. And then, of course, we had the big rally following the quarterly refunding announcement on November 1st. By the way, there's going to be one coming up next week, along with the Fed meeting. So this is an interesting spot here. This is a spot where, you know, you could potentially see some sort of reversal or sideways consolidation. The conditions are certainly right. You certainly had a big intraday reversal today. And of course, if rates here in the U.S. continue to push higher, you get and then of course tomorrow you get a 7-year auction at the 1 o'clock time slot. If that goes like today's auction did and rates continue to push higher, that's going to make the push forward for stocks here in the U.S. much more challenging. Anyway, I hope you found this video helpful, and I wish you the best of luck. Bye.